Good morning. It's Friday, the 21st of June, and this is Govindraj Ethiraj broadcasting and streaming from and headquartered in Mumbai, India's financial capital. The take of the day. Like Amitabh Bachchan in the 1979 film The Great Gambler, Indians now increasingly seem to believe that they can take big risks, continue to make money, and of course get away with it. Before I start, now this is not to parcel out blame because it's evident that the regulators, whether it's the Reserve Bank of India or the Securities and Exchange Board of India, are struggling as well to cope with this inexplicable increase in risk-taking. The challenge, of course, is not India's alone, it's across markets. But India, it seems to be worse, as I'll come to in a moment. In March, the SEBI asked mutual funds to run stress tests on liquidity and various risk ratio parameters on mid-cap and small-cap mutual funds because quite evidently there was considerable froth building up in that space. Subsequent to that, mid-cap and small-cap stocks as a category started shrinking in value, but then they subsequently turned around and came charging back to hit the same new highs and even more that the benchmark indices are now at. So SEBI is presumably figuring out what to do next because the problem, as it were one, has not gone away. Money Control now reports that the National Stock Exchange and the Bombay Stock Exchange are now the world's two top exchanges in terms of futures and options or derivatives. Moreover, and hold on to your seats, the combined turnover of the two Indian stock exchanges accounted for more than 80% of the global equity derivatives turnover in the month of April. This is amazing. Indians are effectively the biggest gamblers within the stock market system in the world, at least going by this data. Data from the Futures Industry Association shows, as per Money Control again, that a total of 8,500 million contracts were traded on the National Stock Exchange in April, which was the highest amongst all global stock exchanges. The NSE was followed by the BSE that saw a little over 2,200 million contracts changing hands in April. Moreover, year on year, the National Stock Exchange has seen a 92% rise. And it's not that all futures trading is very lucrative. Repeated studies, including by the SEBI in the past, have said that 9 out of 10 individual traders in the equity derivative segment incurred net losses, despite which the number of traders has actually been going up almost 5 times in the 2 years up to last year. Elsewhere in the banking system, the Reserve Bank of India has tried to and continues to try and control the growth of small loans, or essentially where people are taking loans to maybe invest in stock markets or to meet their monthly expenses and then keep rolling over. And then remember, the prices of stocks, gold, silver, and even real estate are all at all-time highs. Some of this, like I said, mirror international markets, so we are not alone. A report in the Financial Express, speculative at this point, says the government is thinking of taxing futures and options income just like cryptocurrencies and lotteries in the upcoming union budget. How very interesting indeed. Obviously, this means that currently income from futures and options is treated as income from stocks and shares and taxed as business income and taxed according to the slabs of 5%, 20%, and 30%. The existing classification also allows gains from futures and options to be offset against losses from other business activities. So, all this while, it was like buying and selling shares or equities. Obviously, this has to change now. In what way it will, we don't know at this point. But the fact is, we're not alone in the fact that investors are buying assets and gambling in derivatives because inflation is eating away their savings and the possible growth of them. If salaries don't rise much or the household bills keep rising, you want to take bigger bets for bigger returns. It's very much like a lottery, except that the stakes are much bigger and they happen every day. Savers and investors have to find ways to put their money to work in a way that they get good returns and the economy benefits from more capital stock or productive capital. Now, of course, all of this is easier said than done. But the problem has to be fixed at source. Changing tax treatments will only go that far. And now our top stories and themes for the day. The markets are strong once again. This time, its global tailwinds are picking up as well. The rupee hits an all-time low. Why is that happening despite inflows? Risks should be at acceptable levels, says the Reserve Bank of India governor. And why India's aviation sector is and will remain one of the hottest in the world at this time.
This is the Kaul report with Govindraj Ethiraj.
The markets are holding strong. Global tailwinds are picking up. The stock markets are holding on a firm wicket, though with marginal gains. The Sensex posted its best winning streak in 4 months to close at its highest levels, while the Nifty 50 recorded its highest close of 23,567, up 51 points, and the Sensex closed at its highest level of 77,479. That's up about 141 points. While the indices did rise on Thursday's trade, they were volatile all day, going up and down, something that happens usually when the markets are directionless in a larger sense. The BSE mid-cap and small-cap indices did better than the benchmark indices, and while there are no clear domestic triggers on the horizon, except of course rumors of various tax cuts or increases, the global triggers, like I said, are firm. Global stocks rose on Thursday after an interest rate cut in Switzerland lifted hopes of policy easing across the developed world, according to Bloomberg. Wall Street was poised strongly overnight, again sitting on record highs. Switzerland's rate cut implies they feel confident that the inflation dynamic is manageable, and that bodes reasonably well for other central banks, according to a chief strategist at Zurich Insurance who spoke to Bloomberg. Meanwhile, the Bank of England kept its main interest rate unchanged at a 16-year high of 5.25% on Thursday, ahead of elections on the 4th of July. That's elections in the United Kingdom, which is largely set to see some big changes. However, policymakers said the decision not to cut rates in England was now finally balanced, according to Bloomberg. Meanwhile, gold prices have hit a 2-week high on Thursday after recent weak U.S. economic data raised expectations of interest rate cuts, once again, that is, from the Federal Reserve later this year, according to Reuters. Spot gold was up 0.5% at $2,340 per ounce after hitting its highest since June 7th earlier in the session. The rupee has hit an all-time low. The Indian rupee has hit an all-time low, largely triggered by a strong dollar, which in turn depressed most emerging Asian currencies. The Indian rupee fell to a record low on Thursday, pressured by likely outflows and strong dollar demand from local importers, according to Reuters. So the rupee hit a lifetime low of 83 rupees 66 paise against the US dollar in the latter half of the trading session, and then ended at a record closing low of 83 rupees 65 paise. That's 83 rupees 65 paise. It had closed at 83 rupees 45 paise in the previous session, and the previous low was 83 rupees 57 paise in April, according to Bloomberg data. Now, obviously, all the changes that you see are happening on the margin, and there's a reason for that, and we'll come to it. But the dollar has been strengthening as the Swiss National Bank delivered that interest rate cut, and the rupee, however, is still the best performing currency in Asia this year after the Hong Kong dollar, according to Bloomberg compiled data, which also said, or added rather, that the US dollar strength is dominating the market at the moment, and that's what's driving the rupee to a record low. To get a sense on where the rupee was going and why it was weak despite inflows and which way demand and supply forces were working, I reached out to Anindya Banerjee, head of research for Forex and interest rates at Kotak Securities, and I began by asking him how he was seeing the most recent movements in the rupee.
In the bond market, we have seen quite a bit of flows, close to 1.2 billion in June, and even the equity market has turned positive on the flows. The reason being is that, one, we are seeing buying from RBI at lower levels. The question is, why is RBI buying dollars? It's because if you look at our competitors, for example, China and other emerging markets, they have been depreciating their currency. So, for example, the Chinese yuan today hit the onshore yuan, which is the CNY, hit the lowest level since November. Now, in a competitive devaluation, you tend to see the currency of other countries to compete in that situation. So because the emerging market currencies are weak, and Indian rupee has been one of the strongest currency this year, so it's trying to play a catch up. And the RBI is okay to let the rupee gradually depreciate, because the RBI is not okay if it starts to depreciate fast, but it's fine if it is depreciating slowly in line with what is happening with the other emerging market currencies. So it's primarily the impact of the weakness of the EM currencies on the dollar that is weighing on the rupee than the flows.
You're saying, Anindya, that looking ahead, even if we were to see a lot of inflows thanks to the inclusion of India in the JP Morgan bond indices and other indices, that's unlikely to make a big difference.
Until and unless we see a turnaround in the dollar overseas, I don't think it will have a significant impact on the Indian rupee, because what we will get is these flows will make Indian rupee stronger relative to other currencies, which means Indian rupee is going to depreciate less versus the dollar compared to how much the other currencies will depreciate against the dollar. So we will see a relative appreciation when you change the currency against which you are comparing. But if you just look at the USD INR, that will be largely dictated by what is happening to the dollar against not just EM currencies, even the developed market currencies. And that is where the dollar looks a little strong.
And in the near future, what are the kind of forces of demand and supply that you're seeing in the forex markets?
Domestically, the event is going to be budget. Now, budget generally tends to have a far bigger impact on the equity and on bonds than on the currency, but that one event we will watch because of any major policy shift. Second will be the US election that's far off. That's in November. In between, Fed is expected to cut rates in September. If they do, I think that can be an event where the dollar might see some weakness around that. If they don't, I think then we are in trouble. In the sense, the dollar can really rise because there has been a significant disappointment on this as far as the Fed is concerned. From 3 cuts, we are down to now 1. So these are the 3 events which we'll be watching.
Anindya, thank you so much for joining me.
Thank you so much for having me.
The monsoons have returned. India's monsoons are advancing now after stalling for more than a week, and rains are set to cover central parts of the country in the next few days, bringing relief from the heat wave in the grain-growing northern plains of the country, according to 2 senior weather officials who spoke to Reuters. I know this is a financial report and not a weather report, but weather has and continues to play a very important role in how the economy is moving or will move, and of course the sentiments guiding it. So, monsoons this year are forecast to be above normal, but the sequence of it also matters, as is quite evident from dispersion data in recent years. Reuters points out that summer rains, critical for economic growth, usually begin in the south around June the 1st, that's south of India, before spreading nationwide by July 8th, allowing farmers to plant crops such as rice, cotton, soya beans, and sugarcane. Thank you for listening and your support for the Core Report. We've been streaming for a year, and we think this is a good time and ripe for a quick feedback from you on what we can do new and better on this podcast. And thank you, as always, for some good critical feedback. The link to a short survey is in the show notes. Do not take unacceptable risks. Sticking to the theme of risk I spoke of earlier, the Reserve Bank of India Governor Shaktikanta Das has told banks and non-bank finance companies to not take unacceptable risks in the pursuit of growth. They must have robust risk mitigation frameworks, he said on Thursday at a conference. Obviously, that's somewhat stating the obvious, but recent events, including with and amidst some non-bank finance companies, or for that matter, even banks, suggest that they've played fast and loose with rules and got carried away by the sheer accelerated growth that internet-powered reach could achieve. The governor said that while business models may be designed to drive profitability and growth, they sometimes contain vulnerabilities that may not be apparent. Both regulated entities and supervisors need to be vigilant, he said. Speaking at the Global Conference on Financial Resilience organized by the College of Supervisors, in a report in the Business Standard, Das said that pursuit of business growth is important but should not come at the expense of taking on unacceptable risks. The Reserve Bank of India emphasizes on governance of regulated entities and has imposed business restrictions on some of them due to material supervisory concerns. Now, the Reserve Bank of India has been attacked, mostly by tech bros who've accused the regulator of overreaching, putting the central bank slightly on the defensive, at least in as much as it's attempted to explain its actions and path through them. On Thursday, Das said that while serious problems appear in a financial entity, a Reserve Bank of India officer of the rank of executive director addresses the full board of that organization and shares the regulator's concerns. When material discrepancies are found between an auditor's report and the Reserve Bank of India's supervisory findings, or when material issues are not properly addressed, then the Reserve Bank of India invites auditors for a direct discussion. Das said they now look at the sustainability of business models of banks and non-bank finance companies and then do a root cause analysis of problems and vulnerabilities, adding that advance action is initiated whenever they notice or smell a crisis. Commenting on their own decision to increase risk weights for loans in November for unsecured credit and bank loans to NBFCs, the governor said this had brought down credit growth to these segments. According to him, the timely action has resulted in a situation where growth of unsecured loans, which was in the order of 30% growth for credit cards, is now moderated to 23%, Similarly, bank lending to NBFCs, which are also about 29-30%, have come down to 18%. He broadly said that it was better for the Reserve Bank of India to act in advance and slow down credit growth, or rather at the cost of slowing down credit growth, because they could see some evidence of dilution of underwriting standards and or there was not sufficient evidence of proper credit appraisals. Of course, all of this does not mean the problem of risk will go away, going back to the point that we started at, given the fact that there are some macro factors weighing on savers and investors, which is compelling them in some ways to take some bigger risks in borrowing and then subsequently deploying their funds. A big growth year for aviation, but challenges remain. Domestic airlines will see traffic growth this year, though losses are set to increase for the industry as a whole as well. More specifically, domestic traffic is projected to grow between 6 to 8% in 24-25, that's the current financial year, while international traffic is expected to grow between 9 to 11%, aviation consulting firm CAPA India has said, adding that losses could touch between $400 to $600 million this year. Now, we will come to why airlines are losing money despite these boom times. Of course, there is one airline, that's Indigo, that's powering via record profits. Interglobe Aviation, which operates Indigo, reported a profit of about 1,900 crores for the Jan to March period, that's last year or this calendar year, the sixth straight quarter of gains. India's airlines are expected to add about 84 aircraft this year, taking the fleet count to about 812 by the end of the financial year from 728. The fleet size will double by 2030. CAPA India also expects about 25 more airports to be privatized, coupled with an investment of $4 billion by the Airports Authority of India in the next 2 years to improve airport infrastructure. But the big challenge will be shortage of pilots, and that will be a concern for Indian aviation. Much more on where the industry is headed, the boom times and the big challenges ahead, I reached out to Kapil, Kaul, CEO of CAPA India. I began by asking him what he took away from the CAPA India summit that saw the who's who of Indian aviation gathering earlier this month in New Delhi.
Overall, I think the industry seems to be quite excited about the phase that started about a year back. You could say even it started with the privatization of Air India. It's beginning to reflect in the strategies of the airlines and airports. So there was an optimism across the industry, CEOs, across players. I think most of them, the airline sector, particularly Air India and Indigo, are looking big, thinking big, acting big, preparing big. Airports are basically working with the airlines to make sure that we have the requisite infrastructure ahead of time. There was an optimism which was continuation of what we saw in FY24. All around optimism about India's growth prospects in aviation for the decade ahead.
Right. You know, in the last year, when I say last year, I mean, let's say like the last 365 days or more, seen also some of the biggest expansion initiatives by airlines like Indigo and Air India. Is that now beginning to play out?
Not really. I think the orders that was signed up by Air India about a year back and Indigo over the last 1 year. I think the order book will start reflecting maybe in a year or so. For Indigo, I think the wide bodies will come in FY27. And the narrow bodies, they don't require, I think it may come in end of this decade. As for Air India is concerned, they have not got the order. They have not started getting the aircraft from the order book as yet. They are mostly getting the aircraft that was meant for Chinese aircraft. The 737s were meant for Chinese airlines that came handy for them. They were available and they signed up for them. The 350s and 777s are lease. I think the order book will start reflecting soon, both for Indigo as well as Air India.
Right. And I'm going to come to financials in a moment, but what's growth looking like for this year? And also maybe somewhat, let's say, subjectively going by the mood that you saw at the conference this year.
You know, Govind, I think one of the things that is that the capacity constraints are visible. The aircraft, the induction and the capacity growth that's likely to happen in FY24 continues to be constrained because lack of aircraft. So I think our assessment for FY25 for the domestic is about 6 to 8% growth for the domestic for FY25. International is roughly about 9 to 11% for FY25. The growth could have been much higher in high double digits at the capacity that's continues to be grounded. Had that not happened, I think we would have seen a high double digit growth in domestic. But because of that constraint of the aircraft in ground minus go, we see this is about 125 aircrafts in ground. That's reflecting in the capacity constraints. The airlines are not able to put in the capacity that they would ideally want, and that is impacting the growth prospects for this fiscal. So FY25, we will see growth around 6 to 8% for domestic, around 9 to 11% for international.
Now, on numbers, so Indigo is obviously doing very well and they continue to report record profits, but the rest of the airlines are not. And cumulatively, therefore, the industry is still losing money, $300 to $400 million annually at current run rate. What does that tell you broadly?
No, I think, Govind, one thing is that the FY24 results, if you take Indigo aside for a minute, Air India Express halved their losses. Air India reduced their losses significantly. Vistara is near break-even. So if you combine minus Indigo, the airlines, they still would lose about around 1.4 billion for FY24. They lost about 1.4 billion for FY24. But the losses have been significantly lower than what they could have been had the capacity constraint not resulted in high yields both in domestic as well as international. The financial profile has improved for airlines, though they're still reporting losses. As I said, Vistara is near break-even. Air India Express halved their losses. Air India has reduced their losses. So overall, the losses are reduced significantly. But excluding Indigo, we still are losing about 1.4 billion. Indigo has been an outlier, as I said, reported a profit of about 1 billion for FY24. So if you include Indigo, then the losses for the industry are going to be just about 400 million plus. But if you exclude Indigo, which is what we should do because it's been an outlier for FY24, we are seeing the industry losses for FY24 at about 1.4 million.
Right. And therefore, does that cause any concern if, let's say, all airlines or most airlines are not yet doing well in terms of the health of the overall industry?
Well, I think Air India's transformation is a 3 to 5 year journey. They're just in the third year. So I think the profitability will reflect in a couple of years. So that is on unexpected lines. Akaksa is also in a startup mode, doing well, but they continue to expand aggressively. So their profit profile is going to be maybe a year and a half away. Except Indigo, which is showing profit, rest of them are improving, but they are in line with whatever their business plans are. So it's not a surprise that Air India is losing money, or Air India Express is losing money, or Akaksa is losing money. They're losing relatively less, at least for FY24. So that's why I think they're relatively losing less than what they should have.
You're saying that the health of the industry is on the right.
If you look at in FY25, we see the financial profile of the industry mirroring FY24. Indigo around the same numbers as they reported last year. The rest of the airlines would more or less report a similar losses that they reported in FY24. So we're seeing FY25 a mirror of FY24 in terms of financial profile of these airlines. In terms of yields, we see similar. In terms of load factors, we see similar. In terms of fuel, we see it similar. In terms of currency exchange, we see it similar. So our whole guidance for FY25 is that it will mirror FY24, except that the domestic growth will come down from 13.5% or 14% to about 6 to 8%, largely because of the capacity crisis.
Right. And so one of the things that you've pointed out as a challenge going ahead is shortage of pilots. Is that the key challenge? Is there anything else that you see? Because the positives we've largely touched upon, particularly on the growth and expansion side.
Pilot problem is a big problem. We are underestimating the challenge of the pilot problems. One is that the FTDL, which is the new FTDL norms, will kick in from second half of the fiscal. So that will possibly increase the pilot requirement by about 15%. There is the need for Middle East carriers to poach pilots from India, train pilots from India. That will happen. And the growth cycle will start beginning from FY26 back to a double-digit growth number. So I think the pilot is a serious problem. It's not a pilot problem for commanders, but also first officers. So we have a challenge. I think we are perhaps underestimating the challenge that the pilot or the skill issue is. If you're a pilot problem, you have a cabin crew issues, you have flight dispatchers, you have ATCOs, you have airworthiness inspectors at DGCA. So the shortage of people is going to be a key issue going forward. We have not, because the aircrafts are grounded, we have not seen the sensitivity with respect to the shortage of labor. From FY26, once most of these grounded planes should start coming back and the airlines keep adding capacity, we will be in for a serious shortage of people. And this is not just about pilots. And within pilots, it's not about commanders only, it's first officers. You have flag dispatchers problem, you have ATCOs problem, you have airworthiness problem, you have cabin crew problem, you have AME problem. And as I said to you in your last episode that we did together, that it took industry 90 years to be about 700 plus aircrafts. In next 5-7 years, India industry is going to double in 5 to 7 years what it took 90 years. So it's bound to have a shortage of people, shortage of resources, and that's going to play out. The question is how well we minimize the impact. But it's bound to have a problem. You can't double up the industry in 5-7 years without going through some of these structural issues which we have been talking about.
Right. Kapil, thank you so much for joining me.
Thank you, Robin. Thank you very much.
Speaking of travel, Bloomberg is reporting that as the world begins to fly again in the third quarter, 10.5 million flights are scheduled to crisscross the skies. The International Air Transport Association is anticipating record passenger numbers this year and aircraft that will be about as full as they were before the COVID virus struck. And of course, all of this would use record amounts of fuel. So bottom line, this is a hot year or a strong year for the aviation industry. And presumably that means across the board, from airlines to support services to everything that goes into travel. Before I go, here's some feedback basis our question to you on what you would like to see more in the core report. So here are some quick ones. Jayachandran says he would like a section on personal finance. Damodran says he would like us to focus on key regulatory changes and developmental issues in states. Yogesh says he would appreciate more state-level economic or financial updates, including news pertaining to Tier 1 cities like Mumbai and Pune. That's very interesting points. We do not cover too much of state-level activities and developments, possibly because there's limited data, at least compared to what we see at the union level. But I will take this advice seriously and keep an eye out for important events, at least in the most industrialized states, which I guess matter to most people. Kishan says, I would like a weekly roundtable discussion on economic topics with analysts and experts. Absolutely. We've been doing that off and on, perhaps a little oriented towards the elections or coming up to the elections. But this is something that we'd love to and will continue. So thank you all for your comments and feedback. And I know there are more of them and we will be taking them as often as possible every week. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in. And thank you once again for listening.